If you look at historical interest rates over the last decade, you will only find two other occasions where interest rates moved a quarter of a point in a day higher, and that happened yesterday. So we're going to talk about the reasons why on today's video. So here's the deal, y'all. I'm going to dive right into the numbers. 30 days ago today, the national average from Mortgage News Daily was 6.87%. Today, it is 7.37%. So we are exactly a half point higher than we were 30 days ago. We are a third of a point higher than we were 1 week ago. Actually, more than that. We were at 6.99 1 week ago today. So here's what's moved the markets and moved them pretty dramatically. We had a miss to the upside on yesterday's consumer price index. We were expected to be up 0.3% year over year. We were up 0.4%. So that 1/10 of a point miss to the upside on that report has taken the overall inflation rate from 3.2% to 3.5%. 3.4% had been expected. Here's the deal, y'all. As folks are looking forward to Fed cuts, and they're looking to try and time the eventuality of that cuts, when we get a strong read on inflation like we got yesterday, it has the effect of pushing those rate cuts, those anticipated cuts later in the year. So we had, going into this last week's report, we had a 94% chance of a rate cut in May. That is now a 6% chance, y'all. This is from CME FedWatch. This is a website that tracks where the voting members of the Fed are. The Fed actually plots this at their meetings, y'all. They do a dot matrix chart that shows where each Fed member is likely to be over time, and they project that out a number of years. And that's where these tools come from. And again, that's CMEFedWatch.com. You can go to that website and check things out for yourself. There is not a likelihood of a Fed cut now from the market. This is based on what the market is pricing in, y'all. This isn't based on what the Fed may actually do. This is based on the market's expectation. This is an actuary based on where the market thinks the Fed will be. That first Fed cut that we have been anticipating would be in June has now been pushed back to September. That's when the market consensus is that the Fed is likely to move favorably, is in September, with cuts favorably priced through the remainder of calendar 2024. So the market had been anticipating, well, y'all, 2 months ago we were talking about 6 rate cuts this year. Then we were talking about 4 rate cuts based on the strength of some of the jobs numbers that we had seen. We're now projecting a likelihood of 2 rate cuts in calendar 2024, with the first of those being now, as far as the market is concerned, at the earliest in September. So what does that mean for us? Well, it means that a $400,000 house, based on it being a half a point more expensive to buy it from where we were 30 days ago, that $400,000 mortgage just got $134 a month more expensive. Y'all, I wish I had better news for this call. The good news is when we have a market reaction this severe to a report that frankly was only off by 1/10, I do think that we're due for some correction. When you look at some of the technicals in the bond market, there is a lot of downside opportunity. There's a good ways for rates to move based on how bond charts are flowing today, both to the upside and to the downside. So the downside potential, I think, based on how wildly the market moved yesterday, generally, those are overselling events, and we might see some contraction. I will tell you, though, we're not seeing that today. We're seeing rates sharply higher again today, even in addition to yesterday's losses. So it's going to be a rough ride for a while, y'all. As always, I'm going to keep you updated on what moves the market and why. And we will talk more about it next week, and hopefully we will see a bit of a pullback with this potentially being a bit of an overreaction. So we will see where the market takes us next week. Hopefully I've got better news then. Stay blessed, stay safe. All of my contact information is on the screen, and as always, we're blessed to have your referrals here. We do mortgages for a living, and we welcome the opportunity to work with your clients. We view ourselves as being the most informed team in the marketplace, and we would love to be able to share some of that knowledge so that they can choose the best possible time to lock in their rate and the best product to lock. So in any event, hope this is helpful for you and for your folks. We will talk to you next week.